Okay, hi there. Welcome to another set of videos on macroeconomics. We have been looking at the balance of payments in our A-level economics in the last few days. So I thought I'd share with you some of my updated videos on the balance of payments. We're going to start by thinking about the trade balance, which is a key part of a country's balance of payments. Now, the trade balance is the difference between the value of exports and the value of imports. Quite important to put the word value in there in an exam, and the trade balance is sometimes referred to as net exports. Well, does the UK run a trade deficit or a surplus? The answer is it depends. Depends what we're trying to measure. Let's start off by thinking about the trade balance in goods. This is things like cars, washing machines, smartphones, LCD screens, food and drink. And you can see that if you follow the orange line, the value of our imports of goods has been climbing steadily from year to year over the last 25 years or so, and is now exceeding the value of our exports of goods. So we're running a trade deficit. The balance, if I just put in the balance there, as it is widened, in fact, to over £130 billion in the last year for which I have data, which is 2019. So we're importing around £10 billion worth of goods per week. We're exporting less than that. Our exports have gone up, of course, but they haven't kept pace with imports. So the UK is running a trade deficit in goods. If we just go into a bit more of the granular detail and think about the contributions to the trade in goods by commodity, we can see, for example, look at the orange area there. That's finished manufactured goods. A new car, a new smartphone, a finished washing machine, for example, or even for example, a finished solar panel or wind turbine. Britain is a net importer of finished manufactured goods. We're also a net importer of food, beverages, and tobacco, and also now a net importer of oil, which is a change from years gone by. However, we also have a trade in services, so things like financial services, tourism, transport, business services, cultural services, for example. And here the picture for the UK is different, definitely worth knowing about. Follow the blue line here, the value of our exports of services has been climbing rapidly, now well over £300 billion a year, and it's greater than the imports of services. And the gap, of course, is the trade surplus here. Let me just put that in for you. The UK ran a trade surplus in services in excess of £100 billion in each of the last 3 years. Okay, that's not as big as the trade deficit in goods, but it's quite a significant offsetting factor. We say that the UK economy has quite a strong comparative advantage in many service industries. And again, looking at the granular detail, the green area looks pretty prominent there, doesn't it? That's financial services, insurance and pension services, construction, etc. Actually, we run a deficit in travel. I guess that's partly because millions of UK people, certainly prior to the pandemic, travel overseas on a holiday or travel to work overseas, for example. And of course, that counts as a service import. So there's the picture on our services, much better than goods. If we put the two together and express the data not in billions of pounds, but as a percentage of our GDP, as a share of our national income, follow the blue line there, that's the trade deficit in goods, minus our trade surplus is in orange. Well, I put the two together, there we go, there's our total trade in goods and services. And in fact, in the last 10 years or so, overall, our trade deficit has been pretty stable at or around 1 to 1.5%, perhaps closer to 2% of GDP. So Britain runs a trade deficit in goods greater than the deficit in services. If we look for a moment at who we trade with and what the trade balance is in goods with various countries, of course, leaving the European Union at the end of the transition period, we run a significant trade deficit with Germany of nearly £30 billion, and countries such as the Netherlands, Belgium, and Italy and Spain. In 2019, the UK's goods trade resulted in a trade deficit with most of the countries inside the European Union, biggest with Germany. The Republic of Ireland, however, was the leading country with which the UK had a trade surplus of just over £8 billion. We also have a trade surplus with Malta. Quite a few countries there, Lithuania, Bulgaria, Slovenia, etc., where there's essentially balanced trade in goods. Now, globally, in 2019, the United States reported the biggest trade balance deficit, just over 920 billion US dollars. Our trade deficit in goods is over $200 billion if you convert to dollars. India runs a big deficit, so too does Hong Kong, Philippines, and so on. So those are big trade deficits. Of course, there are countries that run trade surpluses. And in 2019, it was China, the country with the highest trade surplus, just over $420 billion. Germany, huge surplus as well, and so too countries such as Russia, Saudi Arabia, Netherlands, and Ireland. So there are some quite significant what we call trade imbalances between countries, and we'll definitely cover that in this little suite of videos. So there we go. That was an introduction and an update on the trade balance. Thank you.